to Do Whatever You Think Whatever You Do. I'm your host, Daryl Scott. This is episode 9, and today we'll be talking about financial stability and building generational wealth. Today, my co-host is Mr. Martin Kahn. Martin.
Nice to meet you, Daryl.
Yes, thank you for coming on. So tell us a little bit about yourself.
So I'm a private lender. We lend to financial real estate transaction, fix and flip, your regular DSCR, ground up construction. We've been lending for about 75 years now. And most of our business are through realtors, investors who comes to us for finance for their projects.
Okay. So you mainly deal with realtors and investors?
Yes, we deal with homeowners, first-time investors. We deal with crowdfunding, where people are putting money up together for financial projects. We're good at raising capital for other investors who's looking for an equity partner.
Okay.
So we'll come in and join with equity partner on big transactions.
Mm-hmm.
You know, there's the new guys who's coming in who might buy, you know, a single family and might say, hey, I have, would you be my equity partner? That's not something we really want to do.
Okay. And then how small and how large are the projects that you prefer to work with?
So most of the projects I do as an equity partners are a $3 to $5 million projects.
Okay.
Some are larger. For instance, if you're building a 10 unit in Brooklyn, you're probably all in for $6 million.
Okay.
On a resale of about 11, or 12 million. Right now we're doing a project out of LA where we acquired 50% ownership and equity of a development site of 393 units.
Wow.
So we're
How
working.
big of a project is this?
It took 4 years to get the plan approval.
Okay.
And now it's going to take about another 4 years to build.
Wow.
So you're talking about 393 buildable residential unit.
Nice.
And about
like a whole town.
80 storefronts, right? It sits on about a little under 14 acres.
Nice. Yeah, that's cool. That's cool.
And what is it called? Monroe Park. I think it's Monroe Park, if I'm correct, saying the right name of the town in LA.
Okay, cool. All right, so we're gonna start with we're gonna talk about the financial stability, but I just want to come and give you guys the definition of generational wealth. And I have here, generational wealth refers to financial assets passed from one generation of a family to another. Those assets can include cash, stocks, bonds, and other investments, as well as real estate and family business. So, how did you get started in the lending business?
So before I became a lender, I was actually a real estate investor and buying, fixing, and flipping. And 2007, when the market crashed, the financial institutes weren't lending money no more to, new construction homes. So I seek private money, and because I actually worked in finance out of college, I kind of understand how private money worked. And my family background is somewhat of a lending investor portfolio background, and
Mm-hmm.
I made relationships. But before I became an actual lender, I was just brokering and being an LO.
Okay. So, how did it was your dad or granddad that started the lending?
My grandfather started the lending.
Okay. So, how did he come about starting this type of business?
Well, if you think about 75 years ago,
Mm-hmm.
most people are lending money to friends and family, right?
Yes.
So even if you look at it in today's aspect, lending money to clients that you've lent money to repeatedly is like friends and family. Because I've been lending money to people for the last 10, 12 years who I've known, 15 years, however long. I'm lending to their kids, grandkids.
Nice.
So my grandfather didn't have a concept of lending, as a lender.
He was just helping
lending
people
money
out because
and
he could.
helping people out.
Gotcha.
And then my dad transitioned into what you call Forex, currency exchange, and you go to a different country, you exchange your money for that country money. My dad did that, and he kind of lend money to people.
Yep.
And that's how the concept of lending came into my household, because my dad was lending money. He was getting different money from different country, and I start, inquiring how to lend money because my dad had all this money,
Yeah.
and that's how I started lending.
I think it's a cool way that it started. So it kind of wasn't like this initial idea, like a longevity idea for your granddad. It was just kind of something he was doing, and your father kind of grew up into seeing him do that. So
Right.
this was something that he was comfortable and understood.
Right. So my grandfather was just lending because it was a way of helping people.
Yeah.
Right. And my dad was lending also because a way of, him meeting his financial stability of living
Yes.
and making extra income.
Yeah.
But I took it to a whole different concept.
Yeah.
If I'm going to lend money now, the regulation has changed. The way of lending changed.
Yes.
It's no longer a handshake.
Exactly.
Everything is paperwork,
Mhm.
licensing.
Yeah.
And I took it from, being a loan officer to being a broker to being, I want to be my own lender.
Yeah.
Because when you're a broker or a loan officer, you're the betting call of your investors, right?
Got it.
Your investor tells you how you want to lend. And not that we're not at the betting call of investor, we're the betting call of the note buyers.
Got you.
Like right now, we're sitting on maybe $100 million of origination paper to sell.
Got
So,
it.
we don't have credit facility that comes in and say, hey, Darryl, you got a credit facility. Well, let's use like one of the big financial institutes like J.P. Morgan Chase or Webster Bank or whoever.
Yeah.
Give you $40 million credit line. We don't have a credit line. We're lending our own money,
Yes.
and then we're originating. And if you're the hedge fund who's buying my paper, and you said, hey, we're going to buy paper at 680 credit score, and I want my borrowers to have experience. And then next month you call me and say, guess what? My guideline changed, but I already loaned $100 million.
Yeah.
Now you don't want to buy that paper because you're no longer interested in buying paper at 8% interest rate and 680 credit score. You want a better deal. You want 9%.
Okay.
Now I'm left stuck holding that paper, right?
How does that work?
So now I got to figure out how to leverage my money again. So if I lend $100 million out to borrowers,
Yeah.
investors, more than likely I'm holding $175 million of assets, right? Because
Got
you're
it.
lending to like 75%, 60%.
Yeah.
Then you got ARV. It's a mix of paper.
Yes.
So Darryl calls me and say, hey, I'm not going to buy your paper no more. Now, wow, I'm stuck. What do? I got to find different avenues of how to liquidate my assets or how to leverage my assets to get more money to lend to the other investors. So that's the difference between a cold hard family-owned private lender than a credit facility.
Mhm.
The difference, the words are credit facility
Yes,
lenders.
yes.
Credit facility lenders are lenders who are lenders, they're lending,
Yeah.
but they have a credit facility line that they're lending on.
Okay.
And their investor
Mhm.
are telling them exactly what they want to lend. Like, I need you to lend based on my guideline. When it's your money, you might have a client who is a good person but just fall on hard times and
Yes.
end up defaulted and end up have a 500 credit score.
Yeah, I was about to say.
He can't get money from a institutional bank. He can't get money from a credit facility because they have guidelines.
Yeah, but he can show that he can pay back.
Right. He can show he can pay back. So a guy like me who has our own money will come in and lend to a guy like that.
Okay.
And then, help him clean up his credit, get him back on his feet, and then, give him a longer term of loan.
That's
A second chance lending, you called it.
This is a cool thing that you just said, because you said not only would you be able to loan the person the money, but helping them get their credit score back to a place where this is good, because probably people that can loan don't go out of their way to help the person get back on their feet in a financially stable way. They probably just loan them the money.
Right.
And just be like, just concerned with their money coming back. So you helping them, also get back on their feet so that they can now pass that on and help the next person. Because this is what happens. We like, if someone helps us and we appreciate it, you want to pass it on to the next person.
So my niche of the business, and I work 10 times harder than any other lender, because if a client calls and said, hey, I call 20 brokers right now to tell you, they have clients, and I call them not problematic, I call them difficult deals, right?
Yeah.
they might call you and say, hey, I got a client, 5 months defaulted, can't get a loan from another lender.
Mm-hmm.
I would try to lend him. I will lend as much as I can, even if I have to lend my own money so the person could like pay off the default amount they owed and become current and wait another 6 months before I can lend them money and help them. I will come in and do those kind of deals.
That's cool.
So that's the difference between being a family-owned business
Mm-hmm.
and have control over your own money versus, you know, lending on a credit facility. Because it's either you have A, B, C, D, or we can't deal with you.
Yeah, that is how they are. They're very strict
We can't
with
deal with you.
their guidelines.
And with my guidelines, there's always a way for me to like help you.
Mm-hmm.
So majority of my business literally comes from referral of people who I've helped.
Okay. Have you had situations where you was helping someone and they defaulted, if you will, weren't able to pay back, or?
I do. I have that scenario right now with a client who came through a referral source,
Mm-hmm.
and right as this moment, he didn't make his first month payment. Not because he didn't want to, it's because he had a heart attack.
Oh wow. Okay.
And he's in the hospital and can't make the payment and have no one to really help him out. So what we have done is that we have sent one of our employees
Mm-hmm.
over to the hospital to find out, to assess the situation.
Good.
And we have made that payment for him.
Okay. So he actually did hurt himself. See, this is a good situation where you are there, because if it was a loaning credit facility, like you said,
Right.
their guidelines are strict. So regardless of if this person was in the hospital or not, they would still go by their guidelines, and he would have probably been defaulted, correct?
Yeah. So look, on my phone this morning, I'm texting a gentleman, right? Early this morning, I'm texting a guy. You can see on my phone right here.
Yeah.
I started texting him this morning. That's the first text. But then I was texting him this time. Then today, I texted him today at 4:04. This is a client of mine.
Mm-hmm.
See, I said,
It's a loan current or late.
it's
Yeah.
current or late. Told me did a modification. Usually, you did a modification, you can't refinance. You got to wait. You have to show at least 12 months payment history.
Yeah.
Because no other lender going to really look at you. Oh, you just did a modification and now you want to refinance.
Yeah.
You haven't paid the loan to show any history of payment. So
Okay.
I'm literally lending this guy father who's like 68 years old money.
Do you usually want to see someone's like history of payments or something before you do it, or it's just based on you guys having conversation and you filling them out, and how does that work with you?
So for me, it's a little different.
Okay.
It doesn't matter how this business changed, right?
Mm-hmm.
Everything is emailed, everything is faxed, everything is, DocuSign.
Yes.
I think I travel to meet almost 50 to 60% of my clients.
Good.
And I feel like a face-to-face interview with someone gives you more of who the person is
Yep.
than actually just a piece of paper.
I agree.
So it's funny because a lot of my clients, I actually call a lot of my clients. I go visit them. I say, you know me, I'm always flying going somewhere.
Yeah.
That's because I go meet my clients.
Got it.
Private lending has now become like institutional lending.
Mm-hmm.
And every time a private lender said, I'm a hard money lender, you're private. No, you're not. You're a credit facility lender.
Mm-hmm.
You took the word out of private lending and become more of an institutional lender because your requirements of documentation is almost similar of a regular conventional bank.
Yeah.
You're asking the client for 1 million documents, but yet your interest rate is not comparable.
Yeah.
And I understand the market changed, and this video might rub a lot of private lender the wrong way,
Mm-hmm.
but you're not a private lender. Stop saying you're a private lender. Say you're a soft institutional alternative lender.
Got it.
If you're a private lender, you're lending money in 48 hours.
Yeah.
You understand? You call me, you got a contract, you go into a problem, you need to close. You got title, you have an appraisal, okay, let's close.
Got it.
Don't need bank statements, don't need background, don't need all this other stuff. You're not a private lender. You're institutional, soft money,
Because they're still
alternative
going
lender.
somewhere to get the
Right.
the money.
Right. So, it might rub a lot of people wrong for what I just said, but hey,
I mean, listen, I mean, what you're doing is you're breaking down the differences between what some people do versus what you do. You're explaining to actually have that, liquid cash and be able to get it to the person at a moment's notice versus someone who
right,
needs a couple of days to get the approval from a financial institution
right.
based on their credit. So this is something that's important for people to understand the difference. Um, Interest in terms of when you have someone pay back, is this comparable to what banks do, or is yours high or lower, or do you have like a strategy for that?
So I had a broker call me yesterday. He has a client, has a property in Brooklyn,
Mm-hmm.
need to finance. Can't finance the client because they don't have on a mixed use building.
Okay.
So I asked him, "What is your rate?" And he was like, "My rate is somewhere like 7.75 or 7.85 institutional lending money, right?"
Okay.
So I actually pulled it up just to show you.
Mm.
So I loaned the guy. I'm lending this guy 1.4 million, right?
Mm-hmm.
And see the building,
Yes.
a 30-year fixed mortgage at what? What's the rate?
8.875%.
Right, on a mixed-use building, right?
Mm-hmm.
And this guy has a 630 credit score,
Okay.
and I'm still giving him. The borrower wanted only 200,000 cash, but I'm giving him 523,000 cash.
Nice.
The reason why I give him the cash is because now pay off his debts,
Mm-hmm.
increase his credit score, go back and refinance, and pay me back.
Yeah. Smart.
Right? So he have enough money to put in his account to show
Mhm.
he has liquidity, clean up his credit, get a better credit score, refinance. A lot of lenders are like they'll lend you so you can fail.
Yes, exactly.
Right.
That's what I was about to say. They just put you out there. They're going to give you the money, and they're like, when it's a problem paying back, that's
Right.
when.
I don't want my clients to fail.
No, it's good.
I like to have clients repeat business and not feel that they got, taken advantage of.
Yeah. I mean, listen, because we haven't, they don't explain financial stability and building generational wealth to us growing up. So it's important for us. Well, what I want to say is that a lot of people are fearful of it because we have no knowledge of it. So it's good that someone would be explaining to you and helping you understand it. And I think as we are adults, doing it while you're understanding it while you're actually involved in it is probably the fastest way for you to understand it. So you helping this guy out, I was going to ask you, when you gave him more than what he asked for, did you explain to him the reason why you was giving this and how he's going to get himself.
Right. So usually when our clients call me
Mhm.
and they say they need a certain amount of money,
Yeah.
I like to do an interview process.
Yeah.
That's why I told you I'm always on the phone. I'm always talking to everyone
Hmm.
because you might have a broker send me a deal and just want to close a deal and make their commission. Right?
Yeah.
But what happens to this client after you get paid
Exactly.
is the client now become my client, my problem,
Mhm.
is my money.
Yeah.
I have to figure out everything.
Yeah.
Even if I don't sell the loan or I keep it on what you call a balance sheet.
A balance sheet.
So a balance sheet, usually we have a certain amount of our loan we keep on a balance sheet for clients we've been dealing with. Like, for instance, you have an experienced investor
Hmm.
and they've been borrowing money from you a long time.
Mhm.
You might not want to sell their loan to a secondary market. You might want to keep them on your books as
Yeah.
a balance sheet client, right?
Yeah.
Because they pay back.
Yeah.
So I usually do the interview and said, hey, why you need 200? Why you don't want more? What is your intention and what is your exit strategy? Are you selling the property? You're going to refinance? Do you have bills to pay off? You have credit card bills? But before I even talk to the client, I already looked at your credit, right?
Yeah.
And I have your credit report and
Yeah.
kind of look. And then I do my own analysis. Like, I become a risk analysis to break it down to the client. Like, hey, why don't we pay down some of your bills?
Hmm.
I love that you want to borrow money from me and pay me, a point higher or 1.5 point higher than what the institutional bank would lend you money at.
Hmm.
I'm grateful for that. But I like to also save you money. I want you to borrow more money from me.
Yeah.
And most of my clients like that. Because no other bank would sit and talk to them or any other lender.
Yeah.
And most of the time, you call a private lender, you're not getting the owner of the bank. You're not getting the owner of the financial firm.
Exactly.
You're speaking to
Representative.
a representative.
Yeah.
So that's the difference.
Yeah, it's true. So, and that representative doesn't have the power to override and certain decisions.
Right.
They would have to get approval and all of this stuff, and that kind of keeps the space in between the client looking to lend something from the person who's able to lend.
Yeah.
When in your situation, you're meeting the actual person face to face. You guys get to feel each other out. I definitely think it's a more comfortable setting.
Right. So I like to say it as if you borrow money from us, or if I've done any business with you, I don't want to ever lose a relationship.
Mm-hmm.
I don't like to lose a relationship. Not every relationship ever remains the same.
Definitely.
If anyone sits here and say you've done business with someone, you remain the same, and then you're lying to me. Right?
Yeah.
We do multiple deals. I've been in business 22 years on my own.
Yeah.
So obviously you have some clients and business associates you don't see eye to eye with anymore. Because,
got it.
Everyone feels a little different.
Yeah.
I like to keep my clients very much in my pocket, always talking to them, calling them. I call my clients all the time. I called my client this morning, hey, let's have lunch.
Yeah.
You saw it. I showed it to you at the gym.
Mm-hmm.
But that's just the relationship I like to have.
Yeah, that's good.
Because, look, we're in a relationship business, right?
Yes.
If you have a relationship with people,
Mm-hmm.
you always will get more business.
Definitely.
You will always continue to grow. It don't matter. Even if I have a problem with someone or someone has a problem with me, I like to solve it. I want to talk about it. Let's figure it out.
Yeah,
this business is very small. Everyone knows everyone.
It's true.
Yeah.
It's true. And the reputation is important.
Very important.
Yeah.
You can't keep all your business 100% accurate. There are always mistakes. Investor who's buying property always asks me how I buy property. Look, I got money tied up in contracts right now that I'm sitting and waiting on surrogate court and waiting on, deals like those for 18 months, 2 years. I have another deal that I'm waiting on for money like that. I just asked for a refund on one deal. It's a lot of deals.
Yeah. So, how would you, or what would you say to help someone get in a position of being financially stable?
Well, the word financially stable, and when you say we're not taught that, I feel like financial stability is not taught in schools at a young age.
Yeah.
Like,
well, really at all, because when you're in high school and stuff, they teach you about government and economics, but they don't teach you how to manage your money.
Right. So managing of money never will be taught in school.
Yeah.
And managing money is taught by cultural background. Right? Because my cultural background is made up of like 4 different races. I can speak freely about them because I'm around 4 different cultures. I got Israeli, I got Arab, I got Indian, I got blacks.
Yeah.
So I'm around 4 different cultures. And then you can see how the cultural pattern grows with people. Like my father will always say, you don't spend money on things you don't need.
Yes.
My mom will be the same. And then I have other family members be like, I want to go buy a Mercedes or a BMW, right? But yeah, the person who's making real money is not spending money on stuff, right?
Yeah.
They're thinking about how to invest. So financial stability technically to me means managing your money. So if you can't manage your own money, but then there's something wrong. Like we have to recheck. You might need to talk to someone. And talking to someone really is not going to help you manage your money.
It's true.
So I believe in like sit down, analyze your monthly income, your monthly expense, and then say, listen, I'm not going to spend more than this amount of money. I'm not going to buy, coffee for $7. I'm going to make coffee at home.
Okay.
I'm not going to buy 5 lunch meals at lunch because it costs $20, $30 a lunch. I'd rather take my lunch to work. So you have to it's called about cutting back until you reach financial freedom.
Yeah, gotcha.
See the difference? Financial stability and financial freedom is different. 2 different things.
Mm.
So financial stability is that you're making enough money that you don't have to worry about your bills, technically for 6 months to 12 months. Financial freedom is when you have enough money to say, I don't need to work anymore. My money will work for me.
Got it.
That's the difference.
Okay. So if we went into numbers and percentages, like of a person's like monthly salary, let's say, how much do you think they should be putting away?
So let's go into numbers.
Hmm.
Let's use, I don't know what's the medium income.
Let's say if a person is grossing, if they got like 10,000 a month.
10,000 a month.
Yes.
Well, you should be putting away about 30% monthly.
So you think 3,000?
Yeah, if
Should
you're
go
making
away.
$10,000 a month gross
Mhm.
or net, let's use net.
That's a net. Yeah.
Net. If you're making 10,000 net
Mhm.
monthly, you should not be spending more than $7,000
On everything.
everything. That
Yeah.
include a mortgage
Yeah.
and everything else
Yeah.
you could think about.
No,
Because
I kind of agree.
I mean, just use the interest rate of 7%, and with property tax at even at a high at like 10,000, with
Mhm.
insurance you're paying say 1,200 a month. Right?
Yeah.
You could live in a comfortable $800,000 house, $700,000 house,
Yeah.
and still pay under $5,000 a month,
Mm,
right?
okay. But that won't. I mean, that. Yeah. I mean, I guess
Yeah.
they might. I mean, they're gonna have to be a little bit cool with the car, like you said, and
Right. So
insurance. Factor those
if
things.
you want to like drive around a 6-figure car
It's not gonna
and
work.
you're making 6-figure income,
Yeah.
it doesn't make sense.
Yeah.
It doesn't make sense.
Yeah. I mean, I've actually heard this before. So, what do you think is a reasonable kind of car for someone who is making 10 grand a month? How much do you think that they should be spending on a car? Let's not talk about names. Let's just talk about like numbers.
I mean, listen, you're making $10,000 a month.
Basically, it'll be a monthly payment. So,
I think. Listen, if you're going with a lease car, a finance car, a pre-owned car, whatever it is, you could get a nice car for about $600-700 a month.
okay.
I mean, that's just being realistic. Cars
Mhm.
are not expensive.
Yeah, it's true.
Look, I just want to look at a Tesla
Mhm.
because it was $400 a month for a
Mhm.
Tesla
That's
SUV.
that price. Okay, so we've got that with the 10,000, but the thing is, and we got to wrap up quickly. But what if the person is only making $6,000 a month, or
Well-
when that comes down, because then it gets a little tricky with them not having enough money to put away.
It's a little tricky. Someone who's making $6,000 a month most likely have a second job. They are probably having a house or a condo or an apartment.
Mm-hmm.
So, I see all these ridiculous prices for apartments.
Yeah.
I don't know how people even rent apartment.
Yeah,
2-bedroom, 3-bedroom apartment for $4,000.
yeah, it's crazy.
Like, that's crazy. Like, I think you get a decent 2-3-bedroom apartment for like $2,500.
Yeah, but it's only going to go up.
It's only going to go up, but you have to always take setback to go where you want to go, right?
Yeah.
So, me and Lauren from the gym, we talked this morning, and about 20 years ago, I slept on the floor of my own house before I actually became who I am.
Mm-hmm.
And I never forget. And a few months ago, I slept on the floor of my own house again because I wanted to remind myself where I came from.
Mm-hmm.
And my wife said, "Why did you sleep on the floor?" But
Yeah.
for me, it's more mental
Exactly.
than anything.
It's important. Yeah.
It's important.
I understand that. So then, what would you say is like one of the safest types of investments?
Well, I'm always a real estate guy.
Yeah.
I always believe real estate, even if the value drop, it all comes back strong.
Yeah.
As we can see from 2007 to now, where
Yeah.
the market is, right?
Yes.
So I always believe in real estate, buying real estate.
Okay.
Even if it's not in New York where you're at or whatever state you're from,
Mm-hmm.
there's other states you could buy real estate.
Yeah.
You could buy, we talk about a car, being $700 for a car.
Yeah.
You could buy a house in other states and pay $700 a month for the mortgage.
It's true.
Think about that.
Yeah. Yeah. So you really have to figure out your priorities and figure out the long term, what you want to do. Like, as he was saying, a little bit of sacrifice on the things that you want now
Yeah.
will pay off
In the long run.
in the long run. And also you'll be setting up for the family and for future generations, as we explained. But that's all we have for today. I will make sure you guys subscribe, definitely. And we'll see you next week.